And it's our Business Morning, live on Channels Television. Great to have you join us. I'm Ladi Williams. Let's kick off the show with some business news now. See, oil prices rose this morning as the U.S. implied consumer petroleum demand surged to a record high in the world's top oil consumer, even as the Omicron variant of coronavirus threatens to dent oil consumption globally. A signal by the U.S. Federal Reserve to tackle inflation before it derails the U.S. economy also boosted prices. We see Brent crude oil futures rose by 80 cents to $74.68 a barrel, while U.S. West Texas Intermediate crude increased by 88 cents to $71.75 a barrel. And back here, the Bankers Committee is calling on Nigerians to take advantage of the COVID-19 pandemic to reset the economy to achieve self-sustainability. And this was contained in the committee's communique released at the end of its two-day annual retreat held in Lagos, with the theme, Building Resilience for Economic Growth. Central Bank Governor, Mr. Godwin Emefiele, who presented the communique, says banks will continue to support employment-stimulating and growth-generating sectors. Among the resolutions, the committee promised to support the central bank and the government in developing the infrastructure of the country. You take a listen.
In 2022, the Bankers Committee will be focusing and supporting the central bank and the government in developing the infrastructure of the country, reducing the level of infrastructure deficit in the country, realizing that there's increasingly limited fiscal space to fund capital projects, particularly infrastructural projects. I'm sure you all know that the President gave approval for the establishment of the Infrastructure Corporation of Nigeria early in the year. As we stand, the board of the Infrastructure Corporation has been constituted. The managing director of the company has been appointed. 4 asset managers have been appointed. Normally, what you will find is that in such kind of infrastructural projects, you will have just 1 asset manager. But we decided to appoint 4 asset managers because we feel that we are in a hurry. And that once an asset is allocated to an asset manager, he goes with his project, you can have at least 4 simultaneous projects going on at the same time, and our asset managers are very busy. As we speak, the Infrastructure Corporation is already working on 3 major infrastructure projects in the country: the Abuja-Kano Road, the second Niger Bridge, and the Lagos-Ibadan Express Road.
All right, that was the Central Bank Governor there, Mr. Godwin Emefiele, at the Bankers Committee meeting. Well, also at the meeting, another burning issue discussed was financial inclusion. And the E-naira is believed will play a part in deepening financial inclusion in Nigeria. Well, to discuss this and more, we have Mr. Yele Okeremi, MD CEO, Precise Financial System, joining us on Business Morning today. Great to have you on the program, sir. Good morning.
Very good morning, Ladi. How are you today?
Fine, thank you. Great to have you. Well, we see money has evolved, so over the years from barter, metals, and others. Now we have, cryptocurrencies, which in turn has brought about central bank digital currencies to the fore. What's your take on this current trend of internet money?
Well, the bottom line is that internet money is inevitable because everything in life today is absolutely digital. So it's an inevitability. It's about countries riding on the waves to get the best they can. And I think for me, Nigeria has done a smart thing, not trying to resist it, or rather than resisting it, riding on it. So I think it is something that nobody can resist it. It's a moving train. It's going to move. It's going to push anything in its way. That's the way I feel about it.
Right, and most countries, use a couple of definitions, for financial inclusion, often using bank account ownership or access to savings and loan products as proxies for financial assets. But how much of an impact will central bank digital currencies have, in banking the unbanked and actually improving financial inclusion? Take, for instance, in Nigeria.
Yes, basically, that you see, when we look at the factors about banking the unbanked, there are several factors involved. I think for me, and these studies the results will differ from society to society. For me, I think if we take a look at our own local environment, I think the biggest challenge for financial inclusion is economic inclusion. And I've said this several times. I've said it on this platform before, your channel, that it's impossible to include somebody financially if the person is economically excluded. However, there are certain other factors that we know in other places, and even in Nigeria, that affect financial inclusion, which may include the cost of having financial transactions, which may also include the convenience or the ease of opening accounts and the likes. So I will say that the central bank digital currencies help within the ambits of perhaps ease of getting people to have wallets. Because essentially, if you take a look at what central bank digital currencies do or what they really mean, they are just a substitute for cash. So what that means is that anybody that has cash is eligible, so to speak, to have a digital currency wallet. So to that extent, I think there's some value. But if we are going to talk about financial inclusion very seriously in this country, I think the first and foremost thing we really need to do is have an economy that works. Let's have a productive economy, an economy that does not just talk about growth, but that talks about development, an economy that doesn't just talk about creating money, but talks about creating wealth, an economy that doesn't talk about creating some giants, but having what I would call an inclusive society where it's not about 1-2 persons becoming trillionaires or billionaires, but where we have majority of the populace involved in the complexities of driving the economy. Now, if we take care of some of these factors that I've spoken about, I want to believe that my opinion is that financial inclusion will also sort out itself. However, the central bank digital currency has some value when you talk about financial inclusion.
Okay, but also there are concerns that, with the E-naira wallet now, this would actually create, a direct link between the central bank and individuals as customers, thereby reducing, deposits with commercial banks. So what do you think about this?
Whoever said that is correct, and that's the truth. Because you see, if you take a look at what this is all about, look, what does the internet really do? What the internet really does at the end of the day is disintermediation. And so if you take a look at all these things we're talking about, digital currencies and all the likes, is trying to achieve more of financial disintermediation. And so you realize that the role of banks that they used to play traditionally, where people would just want to, one of the roles that banks used to play or still play right now is safekeeping of money. So you are afraid because you don't want to keep your cash in your house. You believe that if you keep it in the bank, it is safe. All right. So that's one of the reasons why banks have deposits, if you understand what I mean. However, with the central bank digital currency, that particular need for safekeeping of cash will no longer be required. Because what that means is that nobody really needs to keep any cash. What we really need to do is have digital wallets, and then the central bank becomes the banker of all. And to that extent, there will be financial disintermediation of banks. But it doesn't completely remove or eliminate what banks will still do in the economy. But to that extent of where people want to just keep monies for safekeeping, of course, there will be no need to do that anymore. If it's just safekeeping, just keep it in your wallet.
All right. And the central bank is also contemplating, series of options to push, adoption of the E-naira, with collection of taxes, through the E-naira. And the governor also said is the wallet has gotten about 600,000 downloads. does that mean adoption?
Well, so when we do stuff like this, and incidentally, anytime you have a technological innovation, right, it sits on the tripod. It sits first on the technology innovation itself. That's like, coming up with a concept. And sometimes we say we have a solution waiting for a problem. And because you are technologically advanced, that's one leg. The other leg is social. How do the people accept this technology that's coming on? I mean, take a look. The internet is there. It does very many things. But how have people received it? So internet is successful because there are so many use cases that make people realize that on a day-to-day basis, they have to use it. And then the third leg that helps these things to work is legislation and regulations. And so sometimes there might be need for specific regulations to ensure that at the end of the day, what you are trying to do is useful and people are protected. So I see that the central bank, having come up with brilliant innovation, about the E-naira, is now trying to find a means of making society accept it. And one of the ways they are trying to do is using legislation and regulation. So perhaps one of the things they might be able to say is that you want to pay taxes up to a particular amount of money, then you must use the E-naira, just to allow people to use it, to feel it, and probably begin to try to do smart things with it in the future.
But do you think, the E-naira could actually help in reducing the incidences of tax evasion?
Tax evasion, I don't see the link between tax evasion and the E-naira, because you see, when you talk about taxation, the first and foremost thing you have to understand is what's the tax net? How much of the people are in the tax net? And then secondly, about taxation is assessment. Now, if you have a tax net and you have been able to do assessment, then the next thing is collection of taxes. Now, essentially what the central, what the FIRA, or basically I think the Joint Tax Board, or basically all the tax bodies are trying to do is using banks as agents to collect taxes. And what that means is that, Ladi, if you are assessed of a particular tax that you are liable to pay a certain amount of money and you refuse to pay it, then they can use your balances in your bank to set it off. And it happened some time ago that so many organizations had their accounts virtually frozen or lien, so to speak. So what that means is that if you have more people using the E-naira, it means that in a way, if they are assessed already and they haven't paid the taxes, then there is a possibility that the E-naira wallet may be used as a lien. But you see, if you really take a look, I haven't done any serious study about this, but perhaps the people who are involved in tax practices will help us do studies to know whether the challenge is the ability to collect taxes, or the ability to assess taxes appropriately, or the ability to even have an appropriate tax net. What percentage of Nigerians pay taxes? And that also speaks to what I spoke about earlier when I spoke about inclusive economies. So what we see is that there's a lot of concentration on big companies, on big earners, and those are the people that everybody is concentrating on. But when we have a much more productive economy, then we have a larger tax net, then the challenges of assessment and collection of taxes will change. Because today, I tell you what, majority of people that pay taxes don't need the E-naira wallet for the government to get their taxes from them. They can always get their taxes from their bank accounts today.
Right, right. Well, but also in a bid to deepen adoption, the central bank is also, asked payment service banks and fintechs to develop and introduce, products that are based on the E-naira. What do you think are the possibilities here?
Now, there's a lot of possibilities, actually. So all we really need to understand, and I think what the central bank is trying to do, and that makes a lot of sense to me, is, okay, listen, guys, we've created a platform for you. What we want you to do right now is to use it. And so what they are expecting is for people to develop what you call use cases. So the fintechs, as innovators, will now be able to say, for instance, if you want to make payments for certain things, you may be able to make the payments rather than making payments directly from bank accounts. you may be able to make the payments using the E-naira. And once this kind of innovations begin to happen, then of course you expect there will be a lot more traction and a lot more adoption of the E-naira. I think it's a smart way to go.
And looking, that, Bitcoin and other cryptocurrencies actually, drove, central banks to start looking at central bank digital currencies. What do you think, would happen to the likes of Bitcoin?
Now, so let me just make a statement about this. You see, the challenge about, the cryptocurrencies, and I mean, I've even seen people argue whether the central bank digital currencies are cryptocurrencies or not. And I want to state equivocally that, yes, they all belong to the category of cryptocurrencies. But the issue is that when you look at these instruments, and I'm using it as an economic term now, these are instruments, financial instruments. The credibility of any financial instrument depends on the issuer of that instrument. Now, to be very honest, I've seen a lot of people trying to discredit central banks. And I think it just doesn't make sense. You want people to distrust the central bank and trust people that they do not know. Even the Bible says it, that thou hypocrite, you say you love God that you have not seen, but you do not love your brother. Hey, give me a break. If you really understand what is going on, your biggest trust should be in sovereign countries. But what has happened is that social unrest, and not just in Nigeria, in very many countries, and particularly countries where you have very weak governments, have allowed so much distrust to fester, so that the citizens of countries do no longer trust the leadership, the political leadership, and even the financial leadership of countries. And that's why so many people are trying to keep assets in cryptocurrencies. And that's a game of risk return. But to my mind, as an individual, I would rather put my trust in people that I know, that I can see, I can sue, I can touch, than people that are using pseudonyms that I do not know, that
Right.
they vaporize just at the snap of a finger. That's the way I feel. But so many people do this for their own reasons.
Because it seems that the decentralized nature of Bitcoin is actually the attraction for them. As you mentioned, distrust with the leaders and, banks nowadays.
Correct. That's the bottom line. Look, that's the only reason why anybody would say you want to put your money in, some instrument that you do not even know the issuer. You don't know the issuer of the instrument. So who is the ultimate obligor? You don't even know. And then you still trust that. I think it's something that people really need to examine. But then these are private and personal decisions.
Yeah, quite incredible decisions, I must say. Well, but it's early times for central bank digital currencies. What's your outlook going forward, like say for 2022, for instance?
Yeah, well, for central bank digital currencies, I think, look, in 2022 might be a little bit of a short run. But if we take a look at it to a longer run, let me explain the extrapolation of central bank digital currencies. What central bank digital currencies are expected to achieve is what you call the ultimate cashless economy, which means that they will substitute every single currency that you currently have, which means that if things go according to the plans of the central bank and according to thinkers, it means that there will be economies that you will absolutely see no cash anymore. It is either you have bank accounts or your monies are kept in central bank digital currencies.
All right, I guess it's interesting times ahead, I must say. All right, Mr. Yellow Keremi, MD CEO, Precise Financial System. Thank you so much for coming on Business Morning.
Very great pleasure, Ladi.
Thank you.
And I wish you Merry Christmas.
Compliments of the seasons. All right, now, after the break, I'll be looking at commodities market update. That's in a moment. Do stay with us. Welcome back. Still watching Business Morning. Well, it's all about global inflation. And yesterday, the NBS released inflation figures for November, and it shows inflation dropped to 15.40% against 15.99% rate recorded in October. Well, to make sense of this data, we have Damilola Akimbami, Head of Research at Financial Derivatives Company. Great to have you on the program.
Good morning, Ladi.
Good morning. So, what was your prediction again?
15.2.
15.2.
Yeah, we were more aggressive. We were more
aggressive.
bullish. Yes.
Right. So, help us make sense of this number right now.
Yes, so Nigeria's inflation for the month of November fell to 15.4% from 15.99% in October. So basically, Nigeria's inflation has been declining consecutively for the last 8 months. So since April 2021, we've seen that consistent decline in inflation. And this 15.4% level is the lowest level in 12 months. So the last time we had inflation this low was November 2020. And looking at the breakdown, so all the sub-indices actually fell except core inflation and month-on-month inflation. So by that, headline inflation fell, urban and rural inflation fell. Food inflation also was the major driver of the decline in headline inflation, because food inflation fell to below 18%, about 17.8% thereabout. However, core inflation increased, and the major drivers of the core inflation, gas prices, according to the NBS, gas prices, fuel, and passenger road transport were some of the commodities under the core index, which is the headline less food items. So those were some of the items under the core index that recorded the largest increase. Under food basket, we had the likes of bread, cereals, and tuber. They recorded the largest increase. Bread is not surprising because we know the price of flour has been increasing in the past couple of months. And if you look at a state-by-state analysis, so the states that recorded the highest inflation rates were predominantly in the north, so Gombe, Taraba, those are some of the states that recorded the highest inflation, whereas the states that recorded the lowest, we have Edo and Rivers and Kwara State as some of the states that recorded the lowest inflation. So basically, when the average Nigerian would ask, I mean, my pocket is complaining.
Exactly.
I'm not experiencing that decline.
The market, prices
prices, yes. And so, so it brings to bear or to question the data versus market reality. And bear in mind that this analysis that we're doing is year on year. So basically, what the numbers are saying is that if you compare November inflation in 2021 compared to 2020, it fell at a slower pace compared to the difference between what it was in November 2020 and November 2019. And that's why we analysts, we always look at the month-on-month inflation, which is a better reflection of market reality. And month-on-month inflation increased to about 1.1% thereabout from 0.99 in October. So basically, yes, if you go to the markets, because if you look at a lot of commodities right now, prices are elevated, especially the commodities that are tied to the festive season. Exactly. So the likes of tomatoes, turkey, chicken, vegetable oil, pepper. So these commodity prices are still elevated. So that's what we're seeing right now. And if you not take further, you started your intro by saying that, oh, global inflation. So there's that disconnect between what is happening in Nigeria.
Yeah, because it's rising, globally.
Yes, so and what is happening, exactly. The U.S. numbers came out, was it yesterday or 2 days ago, and it's a 39-year high of about 6.8%. UK's inflation also increased to a 10-year high of 5.1%. If you even look at our regional peers, Ghana's November inflation just came out yesterday, 10-year high of 12.2%. South Africa's inflation also increased. Angola's inflation also increased. But
so how are we doing it?
So that's why I took that time to explain again that, like, look, year on year, that's what the data is saying. But obviously, in reality, yes, consumer prices are still elevated. Yes.
Anyway, well, the Fed, had their meeting yesterday, and they seem to be more worried about inflation now. They used to throw around the world that word, transitory.
Yes.
But now it's looking like it's embedded, and going into 2022,
more structural now.
More, they're expecting about 3 hikes.
Yes.
All right, so what do you make of this, and how is this going to impact, emerging economies?
Yes, so the U.S. Fed has said it's going to complete its tapering of the bond purchases. It's going to end its bond purchases by March 2022, and more importantly, is going to increase interest rates 3 times in 2022. Now, that is significant because, one, the immediate impact, you're going to see the dollar strengthen as a result. And because of the strengthening of the dollar, commodity prices such as oil will record a price decline because the demand for them would fall, because these commodities become more expensive as the dollar strengthens. So the demand would fall, and that would affect the prices of these commodities. One. Two, we're in a situation where that a lot of developing countries, in the past, because of low interest rates globally, we saw that switch to emerging and frontier markets by foreign portfolio investors. So as the dollar strengthens, as the US Fed increases interest rates, you're going to see that reversal of foreign investment funds from emerging and frontier markets like Nigeria, and that definitely would affect the external reserves and position of these countries. Also, because interest rates are increasing, countries like Nigeria that have been borrowing, the external debt, the debt service cost is going to increase, because now we've all been enjoying low interest rates. Interest rates are near zero. But when interest rates start to increase in 2022, and it's not even just the US Fed, the Bank of England is also contemplating increasing interest rates sometime in 2022. It becomes more expensive for developing economies to repay their debt. And that brings to mind, okay, what happens to these countries, especially in terms of their debt distress. We know a couple of countries have had issues and they're battling with debt distress, and Ghana has been one of them. So a lot of countries, Zambia too, I think has defaulted. So it's a major concern, and most of these countries, these developing countries, have to start thinking of how to make their debt sustainable.
Right, and talking about debt, you know,
Yes.
Nigeria was about 38 trillion
Trillion
naira,
naira.
seeking an additional $5.8 billion external loan,
yes,
and a $10 million grant. This
yes,
is quite worrying.
It is, because it's coming again, like we just discussed.
Yeah.
Nigeria is seeking, or the president is seeking to increase its external loan when a lot of global economies and our monetary authorities are becoming more hawkish. So basically, and I think the Senate has approved that $5.8 billion loan. So that's going to increase our external debt position, because right now our external debt is about $38 billion. So that's going to push it above to about $44 billion. And from the report of the DMO, the Debt Management Office yesterday, our third quarter debt stock increased by about 7%, about 38 trillion naira, of which domestic borrowing accounts for about 51% and external debt about 49%. So what the question now is, okay, fine, yes, we know that the government has said it plans to use the borrowing proceeds for so many projects, infrastructure and whatnot. So the major issue is that this debt that you're borrowing, these funds that you're borrowing, invest them, spend them on productive sectors that would have the multiplier effect that would impact positively on the economy. Also, how do you make your debt sustainable? That is, do you have the ability to repay the debt, both current and future debt? That is also the issue, because we talk about oil prices on a daily basis. Yes, today oil prices increased to $74. Yesterday they fell to 72. So the issue is, despite oil prices still relatively higher than what we anticipated, our revenue profile is still low. And that is why the fiscal deficit is widening, and the need to borrow is increasing. So you need to also ensure that you build your revenue, because if your debt to service revenue ratio is low, how do you address that? It's by increasing or boosting your revenue generation.
All right, and just after Jerome Powell finished, talking, we saw that major markets were rallying.
Yes. The US stock market closed positive.
So it seems investors were quite pleased with,
Yeah, so that's why I said, again, the dollar to strengthen, the U.S. stock market strengthened and whatever, because definitely you're going to see a lot of these foreign investors start to switch back. So that's why I said that we're going to see that reversal of funds from emerging and frontier markets. So, and that's what is going to play out. So it's for the U.S. economy, yes, it would have a positive impact. But for other economies, especially developing and frontier markets like Nigeria, it's a cause for concern, because then you have to start thinking of, oh, as interest rates increase, my debt service cost is going to increase. How am I going to repay it? Do I have the means? Am I going to run into a debt distress? Am I going to fall off a debt cliff? It becomes a question. It becomes a concern for a lot of leaders of these developing and frontier markets, and also even countries that are commodity dependent, like I mentioned earlier, because these commodities will become more expensive and their prices would fall. This year a lot of commodities enjoyed a price rally, maybe apart from cocoa, and a lot of these countries benefited from that. We're all coming from a low base because of COVID, And so this year has been relatively good in terms of commodity exports. But next year, we are going to start to see a softening, especially for oil. So imagine if you have a stronger dollar, higher interest rates, so that impacts on the price of the dollar. You have that supply-demand mismatch. So these are some of the pressures that could feed into the price of oil, for instance. And you could see the $74 we're seeing now, maybe even something further to about 60 in 2022, at least the first half of 2022.
Right. Well, I have my eyes on the oil prices. But European and British wholesale gas prices also rose Tuesday after hitting 2 months high during the previous session. What's driving this?
So what is driving is still this Russia-Ukraine geopolitical tension. So until that is addressed, because you know that right now it even goes beyond Russia and Ukraine, because the U.S. is involved, at the point in time China also. So whatever happens, and because of the pipeline that is involved, is very important. So whatever happens, if that geopolitical tension is not resolved amicably, definitely we're going to see gas prices continue to increase. And it's important for Nigeria because one of the factors affecting the local price of cooking gas in Nigeria is the international price of gas. And the other issue is the supply constraints, which the NNPC is saying, and the government is saying that they're going to try to improve or increase supply to bring down the price of cooking gas. So as long as these geopolitical tensions are still prevalent, we're going to see gas prices continue to spike, and that would affect liquefied petroleum gas, or what we call cooking gas in Nigeria. Yes.
Right. Well, cooking gas is another issue we're having now, even with this festive season.
Yes.
Okay, but I see on your slide that we see cocoa prices have risen in Oyo State, and increased demand, and it's fallen in other states. So
yes. So basically, it's just because of increased demand, and where, at least for Oyo State, this is the main crop harvest season. So that has impacted. So the harvest season compared to the demand, so the harvest clearly is not sufficient enough to meet the demand, and once demand is higher, that leads to an increase in price. So we're seeing cocoa prices, at least in Oyo State, trading around $2,700 per metric ton, which, well, yes, the higher cocoa prices are for Nigeria. We stand to benefit from it because of cocoa is one of our major agricultural exports. So that's what we're saying. But as, again, we move into the new year, and bear in mind that this year the rains weren't that good, and they were delayed. So even when they were abundant, it was a little bit too late. So that's what is feeding into it. And if you even look at the global price of cocoa, it's still been averaging around $2,500 per metric ton. So not much difference in the price of cocoa this year.
Not much. So what's happening in the commodities, domestic commodity market right now?
So we're seeing a mixed trend for most of the commodities, and like I mentioned earlier, the main ones that are used for the festive season, so the tomatoes and what else
celebratory.
the celebratory, yes, definitely because of increased demand, we'll see the prices of such increase. And even delving back to gas and water, because cooking gas is what is the main fuel used during this period. But because of the price increase, you're going to see that shift to substitutes. But again, what are your substitutes? Maybe coal, biofuels, kerosene, and even these substitutes too. One, because there's that shift in demand to them, the price would also increase. And kerosene too is affected. The price of kerosene is affected by what is happening to the global price of oil. And because we import all of our refined crude, that affects kerosene. You know, earlier in the middle of the year, around August, September, UK, China had that issue with their coal. They had the energy crisis due to coal shortages. So that definitely would affect the price of coal in the market. So whether it's the commodity, whether it's the fuel you're going to use to even cook this food, the prices are they are elevated. Yes.
Well, maybe I'll be coming to your house to have Christmas food. So what about the international markets now for commodities?
Yeah,
what's happening?
For the international market, so for wheat, looking at the prices between yesterday and today, we saw a decline in the price of wheat due to increased supply in Australia. So wheat prices declined, corn also declined. Cocoa was relatively up. And for sugar, it's what's happening in Brazil. We're seeing some shortages in Brazil, and Brazil is a major producer of sugar. And that's what is affecting the price of sugar globally. So if the prices of our imports are falling, that would help our terms of trade, because then our import prices are falling faster than what our export price is. Our export price, which is cocoa, which is increasing. So
all right, Dami, we'll try to make the best out of
Out of
these
this,
this
yes,
holiday.
exactly.
With all these rising prices.
Yes.
Anyway, Damilola Kimbami, Head Research Financial Derivatives Company. Always great to talk to you.
Thank you,
so much for
Ladi.
coming.
Thank you.
All right, we'll take a moment now. This is Morning Returns in a moment. All right, still watching Business Morning live on Channels Television. Now we head on to the market with Willie Bong. How's it looking there, Will?
Hello, Laddie. Good morning.
Good morning.
It's looking very good this morning. The positive sentiments have returned to the equities market following the previous session, 0.22% loss where we saw. But yesterday we saw a 0.09% uptick in the market, and that's following investors' interest in GTCO, which was up 2.4% yesterday. We're seeing now the all-share index is at 42,327.36 points, and the market cap is now, boosting its strength there. It's now 22.102 trillion naira. The month-to-date loss has moderated to 2.1%, still at negative, and the year-to-date gain has moved to 5.2%. We're moving on to the volume and value and deals yesterday. We saw that there was a drop in the volume. It declined by about 16.3% to 226.18 million units, while it was valued at 2.63 billion naira and exchanged in 3,476 deals. Now, International Brews was the most traded stock by volume at 51.79 million units, while GTCO was the most traded stock by value because it helped to boost the market for 457.22 million naira there traded by investors. But we saw that MTN was up 0.11% yesterday. I'm sure that was why it lifted the market. We also saw FBN Holdings boosted the market yesterday as well. But we're going to have more insight when we talk to Tajuddin Olayinka, stockbroker at Valmont Securities. Good morning, Tajuddin.
Good morning, Will.
Tajuddin, we're seeing an uptick in the market. We're seeing a boost coming back. We're hoping that the bullish sentiments persist. But what do you think the general sentiments in the market are? And what direction do you think the market will be going?
Okay, yes, as you rightly mentioned, market just recovered yesterday after the got a slight drop we had on Tuesday. So most likely we are still going to be having market behave that way because of the fact that there is there is no new information to excite the market other than the one that market is here to fully digest, which is the capital gains tax. Market is still reflecting on how this capital gains tax will shape investor sentiments going forward. So what we are seeing in the market at the moment is more of cherry picking. What are hello?
Hello, I can hear you. Go ahead, Mr. Tajuddin.
Okay. So investors are saying, okay, what will happen with this capital gains tax? Is it going to be a final tax, especially with respect to institutional investors, or is it going to be just the usual? It's tax me here, it's tax me there. So the market is still looking at how this shape the position of the market and how best they can position themselves. So market will still continue to behave the way we have seen it in the last one week. So it's going to be more of cherry picking and bargain hunting until we now finally prepare for the year-end rally, which we still cover anyway. So market is still looking up to year-end rally, even though there are information that they are yet to fully digest, which is on the capital gains tax.
Okay, so looking at the digital tax, and we'll wait to see how that will unfold. We're seeing that FBN Holdings, GTCO, were up yesterday, but the market was down, and this was due to, we saw UBA was down 1.5%. What really happened there? Why is UBA stocks, driving or going down?
It's just, don't forget also that yesterday was the final day for, stockbrokers to send in their returns on public offer. So we also saw the public offer effect in the market in the last few days, especially those who did not really have cash available to really pay for that public offer. So they naturally sell some stock, even though those stocks are not having problems. They will sell where they can have cash to be able to pay for an offer that they cannot immediately pay for, because it also tells us that since there is no immediate access to credit, the only way to fund some transaction is to sell one and buy another one. So it just goes to show that investors are actually doing cherry picking. There's no serious problem with those stocks.
Thank you so much, Tajuddin, for that. We appreciate those insights. Ladi, we're back to the bond market, and we saw that trading was really quiet yesterday. Attention was shifted to the primary auction. We had the NCB and the bond auction yesterday, but the results are probably bringing in on tomorrow's program.
Right. Anyway, Tajuddin is still expecting the Santa rally, but in my mind, I'm like, what if it doesn't come?
That's a bit, because we're close to the end of the year, and I'm wondering when it's going to come. But they're optimistic, and I'm hoping I'm going to be, if they're bullish on the market, I'm going to be bullish as well.
Let's share their optimism.
Yes.
All right, Will, thank you so much. All right, we'll take a break now. When we come back, we head on to London. Just stay with us. All right, now let's head on to London with Juliana right there. Great to have you, Juliana. Well, it's the morning after the Fed meeting. How are investors in the UK reading the outcome?
Yeah, I think pretty well, actually. The leading shares are doing good this morning, and that's because I think Fed Chair Jerome Powell had definitely put a sense of ease amongst lots of anxiety around this new variant and what it means for G7 nations. The tapering off of the pandemic stimulus is still planned. It's still happening in Washington. And in fact, he even suggested that perhaps there could be a rate rise, at least 3 rate rises next year to try and curb back inflation. I believe it was you, Laddie, that said yesterday it doesn't look like it's transitionary anymore. Yeah. And Jerome Powell doubled down on your statement. Perhaps he was watching you on air. But this is good news because, of course, there's so much anxiety about today's Today's meeting domestically here in London, the Bank of England Monetary Policy Committee will meet to decide what happens with all of the economic stimulus they've been pumping into the British economy. Quantitative easing currently stands at about just shy of £900 billion, and interest rates are still low at 0.1%. But because we had that really shocking high figure of inflation at 5.2% running for the month of November yesterday, some are saying, you should be raising interest rates. We don't want to see households being pushed to the edge by April if it rises to 8 or 9%. So we'll just have to wait and see. But certainly some calm amongst the storm was put amongst markets yesterday.
I guess all eyes on a hawkish stance going into 2022 at this point. But I see UK energy suppliers facing a new financial stress test from January, as the regulators trying to boost their resilience in the sector. What are you hearing about this?
Yeah, it's an important story. Ofgem, the energy regulator, has announced that in January next month, the energy sector will be going through this stress test to see just how resilient it is from a wide range of scenarios. We saw just in late summer how many millions of households were affected because 25 energy firms went into liquidation because of the huge surge in wholesale gas prices. Many of them couldn't survive. We do have some sort of benchmark here in the UK. So, of course, if an energy firm collapses, you're not going to be without heating or lighting your fire, but another firm has to take on that customer. It was a major story here in the UK, and it did lead, and it will potentially lead to more reforms in the sector. And of course, Ofgem are going to be leading on that. One of the ideas that is being floated about is the fact that the benchmark that consumers have to pay will be changed. I believe it is due to be lifted in April. At the moment, the regulator only looks at the benchmark every 6 months. There are suggestions that that could be dropped to 3 months. So we'll have to wait and see. But certainly after what happened a couple of months ago with this, exuberant price increase, something has to change. So they're going to make sure next month that the firms that manage to survive can cope if something like this happens again.
All right, we'll keep tracking to see which ones actually survive. All right, Juliana, always great to talk to you. Enjoy the rest of your day.
Thanks, Laddie.
All right, now let's look at what's happening in the crypto market. We see Bitcoin started an upside correction above the 48,000 resistance zone against the dollar. We see Bitcoin gaining some pace with the global markets actually rallying yesterday, and we see Bitcoin wasn't left out there. We see the market cap, $2.26 trillion. It's up 3.10%. 24-hour volume traded, up 13%. The Bitcoin dominance there still at 41%. Price of Bitcoin this morning, $48,990, is up 2%. Volume traded, $36.20 billion. And we see Ethereum back above 4,000. Strong bounce there from Ethereum. Got to about 3,008 yesterday. It's up 4%. 24-hour volume traded, $26.70 billion traded in Ethereum. Let's look at the top alts by market cap. Now, we see it's all green on that count, with Solana being the biggest bouncer there. $180, up 10%. Wow. BNB, $535, up 1.28%. Let's bring in Gold Odusin now, crypto enthusiast, right there to bring us more. Great to have you, Gold. Good morning.
Good morning, Larry.
Yeah, so we see it's the same cycle every year, the crypto market, but traders are still afraid that it goes to zero. What do you see?
Okay, normally as a trader, you should know that this happens always in the crypto market. So I don't think you should be scared that the prices are going to zero, because you always have to have USDT to always buy the dip. So as a trader, you have to be ready for anything that happens in the market, because most times the price action doesn't, now these days, the price action doesn't determine what happens in the market. The fundamental analysis affects the market more. Like we saw the dip that happened in Bitcoin, and rumors had it that it was the Omicron virus that made the market dump that much. So I think if you're a trader, you always have to be ready for this part of the market.
Right. And how do you see the market, ending the year?
Okay, earlier this year they said Bitcoin $200 by the end of the year.
100,000.
$200, yeah, by the end of the year. But as
Right.
it is, I don't think that's going to happen presently. And the market is just ranging. And if you notice, there's no movement in the market presently. So I feel, I don't know, till next year, January, that's when I think there'll be new money in the market. For present, I think most people have taken profits for Christmas or the end of the year.
Right. So I guess gold is looking at January. But what altcoins are you looking at right now?
Altcoins, the movement, Bitcoin actually affects the altcoins. So when BTC dumps a little, altcoins just go so down. But for now, I'm holding Chromia, and I believe that it's going to do very well by next year.
All right. All right, Gold. Thank you so much.
Yeah, thank you so much, Yadi. Thanks for having me.
All right, let's look at the top 5 gainers list. There we see XDC topping that counters up 32.65%. BOR, another one there, 28% up. AR, one of the top gainers there, it's $43.65 a barrel. It's 65 cents per coin. It's 16.19% up. Phantom now, we see Phantom right there in the gainers counter, $1.54. Cents there per coin. Phantom back up there. Was ranging for a while now. It's up 15% this morning. Look at the top 5 losers there. We see near there, topping that count is down about 6.01%. And we see eCash there also down 1.56%. All right, the market is crypto market not looking so bad. Still looking for direction at this point. All right, that's it. On the show today. Thank you so much for watching. Do remember to join us at 1:30 for Business Incorporated for more business stories and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye for now.